Good morning. Good morning. Good morning. Thank you. So good morning to all you guys. Do I switch on this? Do I switch on this or not? Yes. Okay. I think we can start.
Thank you, sir. Hello and welcome to this post-monetary policy press conference. This is the last of this calendar year, and I'd like to welcome all the media friends for this, press conference. We have with us Honorable Governor Shri Shaktikanta, Deputy Governors Dr. M.D. Patra, Shri M. Rajeshwar Rao, Shri T. Ravi Shankar, and Shri J. Sominathan. Also with them are our senior colleagues, Dr. O.P. Mal, Executive Director, Dr. Rajiv Ranjan, Executive Director. So we'll begin the press conference with your opening remarks. So may I request you to do the opening remarks?
Good morning. Thank you all of you for being here. And I think in future, just governor will be better than honorable governor. So, okay, I would like to make a few observations to capture the essence of today's monetary policy. And I would like to make a few points. First, the years 2020 to 2023 will perhaps go down in history as a period of great volatility. Number two, India's GDP growth remains resilient and robust as reflected in our projection of 7% growth for the current year. Third, on the inflation front, the summer of 22 is behind us. We have made significant progress in bringing down inflation. The steady decline in core inflation indicates that monetary policy is working. But don't rush into any conclusion. Please wait for the next point. The fourth point is moving forward, inflation management cannot be on autopilot. The future path is expected to be clouded by uncertain food prices. CPI data for November is expected to be high. 5. The MPC will be highly alert to any signs of derailing of the ongoing disinflation process. Based on evolving situation, the MPC will take appropriate action to reach the 4% target. 6. Liquidity will be actively managed consistent with monetary policy. 7. The balance sheet of the financial sector remains robust. Sectoral and institution-specific signs of stress are being proactively monitored and addressed. We do not wait for the house to catch fire and then act. Prudence at all times is our guiding philosophy. 8. Current account deficit is expected to be modest and comfortably financed. 9. Foreign exchange reserves at US $604 billion provide a strong buffer against global spillovers. 10. The stability of the Indian rupee reflects the improving macroeconomic fundamentals of the Indian economy and its resilience in the face of formidable global tsunamis. I'll stop here. Thank you.
Thank you, sir, for those opening
And what I propose to do is that, a copy of this we will just upload in our website so that it is easy for, all of you to do the reporting. Thank you. Yeah.
Thank you, sir, for those opening remarks. Before we go ahead, may I request my media colleagues, please wait for your turn to be called out and restrict yourself to one question each. If time permits, then we'll go for another question. So I'll begin by inviting Mr. M. Govardhan Rangan from Economic Times to ask his question.
Good afternoon, Governor. This time, in terms of monetary policy, you have taken out all the surprises. It's kind of so more than what the market asked for. So we move to the next topic that you interest in terms of the financial stability. When you say that you won't wait for the house to catch fire. So last time you saw some smoke in unsecured loans and doused it. So which are the areas where you see smoke now, in the sense for you to say that you won't wait for the house to catch fire? Thanks.
You see, as a part of our supervision and as a part of our very close and proactive monitoring of the financial sector and individual financial institutions, our endeavor is always to remain up to date. We have deepened our supervisory methods. Our endeavor is also to use or try to use the smell test also. I have talked about it earlier. So whenever we smell any stress building up anywhere at the system level or at individual entity level, we deal with it in the appropriate way.
Yearly, you are warning about the unsecured loans for quite some time before you acted. Is there any segment that where you feel there is a warning necessary now?
No, I cannot spell out. As and when something like that becomes necessary, we will act. At this point of time, as I have said in my statement today, that the balance sheet of the Indian financial sector continues to be robust. And all the financial parameters of NBFCs and banks at the system level as well as at individual level, they also continue to be well above the minimum regulatory parameters, whether it is in terms of capital adequacy or in terms of provisioning for bad loans, or even on issues of even on the parameter of profitability.
Thank you, sir. I'll move on to Ms. Lata Venkatesh from CNBC TV.
Thank you, Yogesh. And thank you, Governor, for asking people to drop the word honorable. I think that's an extremely honorable statement to make. Thank you for that. So questions, for the first time you have used the words, regulators should also be mindful of over-tightening. Can we therefore expect the interbank call rate to come towards the repo rate of 6.5? It has been at 6.75 for the better part of a couple of months. On the issue of financial stability, you have just said that connected lending framework will be to strengthen the pricing and management of credit by banks. Does this mean that there will be a little more tightening? Will that be the net result of that framework? And just a doubt which comes on this connected lending.
That is the third question.
So it's connected to connected lending. When you announce the unsecured loans, was there a worry that bank loans are going to stock market? Because there was a report from Ashish Gupta that derivatives are now 400 times.
Okay.
Is there any fear that this money is going there?
Whatever was in our mind, we have spelled out. These are precautionary measures which we have taken. Our endeavor is always, our effort is always to act proactively before the, the bubble bursts, before the stress builds up. We act, our endeavor, our effort is always to act proactively. And I have stated very clearly that these are preemptive measures, which we have said. Just hold on. And with regard to connected lending, I would request DG Rajeshwar Rao to please answer that question. And with regard to the other thing which you said about
mindful of over tightening.
That over tightening, we always take a balanced call. I would request DG Michael Patra to reply that. I will supplement thereafter if need be. So first DG Rajeshwar Rao and then DG Michael Patra.
Thank you, Governor. I think there is a bit of a misunderstanding between interconnectedness and connected lending. When we talk about connected lending, it's essentially the lending to persons who have the position to control or influence the decision of a lender. So it is in that context that this guideline on connected lending is being conceived of. Right now the regulations vary between the regulated entities, there are scattered provisions. So in order to bring about uniformity in the process of these regulations, we are coming out with some draft guidelines which will help to clarify the position and have a uniformity in the regulatory approach to connected lending amongst all regulated entities.
If you've noticed, in the first few days of December, the call rate has already started gravitating towards the repo rate, and in fact on the 4th or 5th it was 6.45 sub-repo, and you will see that this is coincidental with government spending. Government balances have been coming down, and therefore, so the previous tightness was also associated with a build-up of balances. Okay, and on the over-tightening, I think I'll let the author.
You see, we have always tried to take a balanced call, and this is not the first time that we have said what is our monetary policy as prescribed in the law. Primary target is price control in terms of maintaining 4% inflation, which I have emphasized. I have emphasized it very clearly in my statement that 4% is our target. I mentioned it again here in my opening remarks. And the law also requires that we have to keep in mind the objective of growth. Last year in May, we spelled out that when we shifted our focus from, when we shifted our focus and prioritized inflation over growth, that same approach continues. There is no change in that stance. It is to place things in the particular perspective. I have tried to explain the overall approach that central banks adopt, and in particular the approach that Reserve Bank has been approaching. Our decisions, as I have said, are dependent on two major parameters, that is inflation and growth. Inflation is our top priority now. We have still a distance to cover to reach 4%. So therefore, the use of the risk of over-tightening should be read along with the previous part, the previous sentence, where I think I have said that a few months of good data should not push us into some kind of a complacency, and the fact that inflation has come within the target range also should not lead to any kind of complacency. So a mention of the word over-tightening should not be read as, it would be wrong to think or assume that a change of our approach, or that any kind of loosening etc. is round the corner. That's not on the table at the moment. Let me be very clear. It's not at all on the table. Look at the inflation numbers. We have said look at the inflation trajectory. So we still have a distance to cover.
Was the stock market exuberance one reason? Do you fear bank money going there?
No, I think that's a that's a very hypothetical question. There have been anecdotal write-ups, but we are mindful of all possible risks building up. For stock markets, there is a stock market regulator. The stock market regulator, that is SEBI, monitors what is happening in the stock markets. And if there is something happening which is of concern to the SEBI, or it comes to the notice of SEBI, I am sure they will bring it to our notice.
Thank you, sirs. I'll move on to Mr. Ankur Mishra from ET Now to ask his question.
Thank you, Yogesh sir. I want to draw your attention towards the announcement which was made in the last policy. You had warned about unsecured loans portfolio, and later on there was announcement from Reserve Bank of India. One, I want to understand that a few of the players have said that they are going slow on sub 50,000 or small ticket size loans. Did you see some problem there particularly? And another thing, NBFCs had also claimed to have reached out to you regarding the problem which will be arising out after the circular which you have issued. Is there some rethinking? Have you done some discussion?
Would you like to take that question?
Sure. Thank you, Governor. See, as it was mentioned while making that announcement itself, that it's a preemptive measure to bring certain prudence and to bring an end to any sort of exuberance that may be exhibited by certain lenders. And effort was made over the previous 3-4 months by way of sensitizing the players to put adequate internal control measures to ensure that the risk buildup is avoided. As the market was not responding enough to that, there was necessity for, as we had mentioned earlier, that we watched the data, and basis the data we have taken certain measure to strengthen the prudential measures that the regulated entities have to put in place. So it is too early to see or pass a conclusion as to what sort of effect it is taking, but at least from our interactions with the market participants, the financial system, as well as some of the articles, are alluding to the fact that there are risk management practices are getting better, underwriting is getting better, and any business model that is likely to throw up an enhanced risk is curtailed. So that is our intention. So it is not to curtail the growth, and we have taken care to exclude growth drivers, the segments like home loans or vehicle loans or to the small borrowers or to SHG. Those segments have been kept outside of this purview. So we would expect the lenders to conduct themselves and draw their business models in a manner in which an avoidable risk buildup is mitigated.
After your assessment, sorry sir, after your assessment, is there also consideration, as I mentioned about NBFCs, that you are having some kind of discussion with problems which are faced?
See, essentially these measures were intended to address the interconnectedness that was building up within the financial system, and also to curtail, because as we had highlighted, it was growing at about 24-25% on a year-on-year basis as compared to the rest of the system that was growing at about 12 to 14%. So that particular segment of bank lending to NBFC had to be kind of calibrated, so that we have tried doing it through the risk weight, and also the NBFC's growth in certain segments was an outlier. Again, that particular segment we have to add risk weight. So it's a kind of a prudential measure at this point in time. It is not to deny liquidity, it is not to ration the lending. It's only we would like the lenders to have adequate risk weights put in place, limits to be set in place for a prudential monitoring. That's all.
Thank you, sirs. I'll move on to this side, sir. Today, one TV channel has been launched, NDTV Profit. I'll request Vishwanath Nair to ask his question from there.
Thank you so much, Yogesh ji. Governor, first question, I mean, my point that I want to ask you is whether this 5 policies of no action and maintaining this withdrawal of accommodation stance, does that inadvertently communicate a neutral stance to the market? Because you are not neutral yet, but 5 policies of no action could indicate that.
That is 5 policies of no action
movement, and as well as maintaining the withdrawal of accommodation stance. Does that communicate a neutral stance to the market by any chance, that you are neutral on rates?
No, I don't know on what basis you are reaching that conclusion. We do not communicate anything inadvertently. Let me make it very clear. All our communication is carefully prepared. We are aware that the markets and the media, you analyze each and every corner of the statement, the comma, full stop, everything. So we are very careful in our communication. There is no inadvertence in any of our communication. So if somebody is assuming that it's a signal to moving towards a neutral stance, I think it will be incorrect. It will not be correct at all. You see, you look at the inflation trajectory. We are still away from 4% target, and that is why and we have said that monetary policy continues to remain actively disinflationary. So therefore, one should not. It would be a mistake to read that we are giving any kind of signal towards a move. Any kind of a signal that we are moving towards neutral. That would be a wrong interpretation.
Thank you, sir. I'll invite Mr. Manojit Saha from Business Standard to ask his question.
Good afternoon, sir. Is RBI comfortable with a EMIR compliant MOU with ESMA? Does that addresses the concern of inspection, audit, and possible penalty? Is RBI comfortable with that? And also one clarification. you didn't mention the word OMO this time. The sword was hanging.
Sorry?
You didn't mention the word OMO this time.
Okay.
The sword was hanging for the last 2 months. So can we assume that it's off the table now because liquidity has been tight? It's tight.
We have said, I'll take the OMO question, and with regard to the ESMA part, I will pass it on to Deputy Governor Ravi Shankar. We have not said that it is off the table. We have announced that in the last meeting. We have said that due to certain factors which are not in our control, it is very clearly mentioned in the statement, certain factors which are not in our control, like the demand for currency during the festival season, the build-up of cash balances in the government, which of course have now started coming down because government spending has picked up. There are certain factors which are beyond our control. And based on market movement, we also make market interventions which have impact on liquidity. All that I have said in the statement is that the need to deploy this instrument has not arisen. Beyond that, I have not said that it is off the table. That instrument remains very much on the table. That is always in Arjuna's quiver. It will be used if and when required, depending on the evolving liquidity conditions. I would request DG Ravi Shankar to take the other part of the question.
Thank you, sir. We believe these MOUs or agreements with respect to market infrastructure agencies like CCIL should be underpinned by the word that is used in their regulations, cooperation. There should be cooperation documents, cooperative documents. And in that respect, we believe that they should follow the principle of mutual respect, one, and principle of mutual trust. They should also be characterized by the principle of deference to local regulation. In other words, we are not comfortable with with regulations anywhere which are characterized by extraterritorial jurisdiction. So and the one we signed with Bank of England, it's there on the website, you would have gone through, you would have noticed that the emphasis is on deference and cooperation.
Thank you, sirs. I'll move on to Mr. Shayan Ghosh from the Mint. That's it.
Hi, following your guidelines on risk weights.
A little louder.
Hi, following your guidelines on risk weights, a lot of lenders have decided to curtail smaller loans, as he also asked. But then do you think that the sudden closure of the tap would affect that section of borrowers who were so far dependent on that? That's one. Second question, sir, is that there have been a lot of instances of cooperative bank board changes recently, then ED raids and all that. So, as a regulator, how do you tackle the cases of corporate governance issues at the cooperative bank level? Thank you.
With regard to ED rates, etc., I cannot make any comment. It is, that's an independent autonomous body. But with regard to the other two components of your question, I would request DG Rajeshwar Rao and Swaminathan between themselves. You can, between the two DGs, you can take those questions.
I think the first point about the risk weights, I think this, as already mentioned, it's essentially a prudential measure to curb growth or moderate the credit growth in certain specific sectors. It is not tantamount to turning off the tap. The tap is open, but only thing maybe the pressure has been reduced a bit. So I don't think that is really the intention, and not unlikely to be the outcome of the measure which we have actually announced. Now, coming to the governance issues, I think broadly we say that through the supervisory process, we have a close monitoring of the various parameters of the functioning of the regulated entities, which includes governance, business models, risk management, compliance, etc. So it is a package which monitors the entire functioning of these regulated entities. So if there are certain concerns about the regulated entity, insofar as governance is concerned, action would be, there would be an engagement with the concerned entity to take appropriate action as may be necessary. Mr. Swaminathan, if you would.
Thank you. Just to supplement on that, on this up to 50,000 category, to put a context to it, the composition of that particular segment is less than 0.5% of the total outstandings. So while of course it may be dealing with a lot of number of people, it's a segment that cannot pose great risk on its own because the total quantum itself is less than 0.5%. That's in terms of the context part. The second is that we have, as I mentioned, that we have what we would like to curtail and expect the lending institutions to provide for more by way of additional risk weight is some of those consumption-led segments or unsecured credit which do not have a defined end use. We have taken care to exclude, to support whatever growth drivers are already there. So whatever lending that was taking place for which a clear end use was not visible or completely unsecured without a clear purpose is what will get curtailed. Basis this, there will be some recalibration of business models, also recalibration of the growth numbers. That is what is the intended effect of the regulation. So if it is playing out, I think that is only giving the intended results. And as DGMRR clarified, it is not our intention to deny or ration credit. I think there are enough headrooms available. The exposure framework permits adequate lending to be provided for supporting the growth. And on the second part, again to supplement on that, governance and effectiveness assurance function has been on top of our priority. So from a qualitative perspective, while of course quantitative parameters, the entire financial system looks very good at this point in time, what we would like to focus is on the qualitative parameters. So that is how you see, it has always been a focus area, but you might hear us more on governance and the effectiveness assurance functions because we feel that strengthening of these two is what will ensure a continued stability of the financial system. So that's why the emphasis is. Thank you.
Thank you, sirs. I'll request Ms. Shyama Mishra from Doordarshan to ask a question.
Hi, Governor. Are there any external factors that are looking promising for the Indian economy?
That are looking promising for the Indian economy. I think the major factor is that I think there is growing international confidence on India's economy. Our interaction with, my interactions with governors of other countries, our interaction with various other regulators and stakeholders and other investors in particular from other countries, major investors who visit India, and some of them do come to RBI and meet us. I think there is a growing confidence in the potential of Indian economy and India's capacity to grow. I think that is probably something which is which is really noteworthy. And with regard to that also translates into another area, namely I think confidence from the point of view of investment, making investment, confidence also from the point of view of, that is a kind of a confidence in the quality of Indian products, and more particularly the quality of India's services exports. There is a greater trust, confidence on the quality of our merchandise exports, on the quality of our services exports. That is the inherent quality and the strength of all that we are doing. Is there anything else you would like to add? That's all.
Thank you, sir. Moving on to this side, I'll request Mr. Anup Roy from Bloomberg to ask his question.
Thank you, sir. Sir, you are sounding very cautious about inflation, and previously you have said that we will not consider easing or think of easing before it settles around 4% on a sustainable basis. But going by the analysts, it is not going to happen before 2025. So are you going to keep rates elevated before, for this whole year, next year, or something else will prompt you to cut probably US Fed rate or something?
You see, specifically on the rates and the cut or etc., we have very explicitly stated, I have stated, and I think DG Michael Patra has also stated, we refrain from giving any forward guidance, considering that with the kind of uncertainty that lies ahead of us. And in my concluding para of my statement, I have said that the future looks very fickle, and I have also said that new shocks can hit any economy. It can come from anywhere and hit any economy anytime. So if that is the level of uncertainty, And if our inflation is still quite away from 4%, we just cannot give any forward guidance about whether we will tighten further or we will loosen or what we will do. Everything depends on the evolving situation. It is not possible in the current situation for anyone, any central bank to give a forward guidance. You would have seen that the level of forward guidance also given by many central banks internationally have, now sort of have come down.
Thank you, sir. Thank you, sir. I'll move on to his right. I'll invite Mr. Roisuke Hanada from Nikkei Asia to ask his question.
I want to ask about the general assessment of the Indian economy. As everyone aware, the latest GDP statistics show the robust growth. However, at the same time, some private institute reported that the jobless rate temporarily recorded over 10% in October. I understand it's not a government official statistic, but what do you think about the current and future expectation regarding the employment environment in India?
We have analyzed all these aspects in great detail internally. I would request DJ Michael Patra to please take that question.
There are now very credible official statistics on employment. So I will refer you to the periodic labor force survey, which is put out by the government of India. That has been conducted since April 2017. So you have a consistent series right from 2017 July. And if you look at those data, which are available right up to September 2023, you get the labor participation rate, the worker to population ratio, that is the amount of employed people in the population, and also the unemployment rates, not only for the country as a whole, but for women and men, and also for urban and rural areas. So if you see the labor participation rate, it is at its highest level ever. People wanting to or seeking work. And as regards the unemployment rate, it has fallen to 6.6%, not 10%, and that is probably the lowest in the series right now. Thank you.
Thank you, sir. I'll invite Mr. Piyush Shukla from Financial Express to ask his question.
Good afternoon, Governor. Good afternoon, DGs. Sir, the transmission of your rate hikes done through the last year and this year, it's not reflecting in large banks' savings account deposits. So what are we doing about that? Like Lata ma'am said, a lot of people are parking money as well in mutual funds. So small banks are not able to register any growth in their CASA, minuscule, single digit, lower single digit. So what's actually happening there? And secondly, sir, the willful defaulter circulars which you've asked banks to apply within 6 months, there's a representation I hear made by IBA to extend the timeline to 1 year. So any update on that? Thank you.
The first part related to
transmission on savings rate of large banks.
Okay. Now, with regard to the transmission of rates, that information I have provided, the numbers I have provided in a footnote to the statement. It's there. You might have already noticed it. You are talking about the savings and savings
yes.
bank interest rates. You also referred to more and more money is going into mutual funds. Now, that is the function of the economy. That is the function of the market. And that is a decision which each individual has to take where he wants to put his money. How much money he wants to keep in banks, how much money he wants to put in mutual funds, where all he is going to deploy his money or his savings. So we cannot really, have anything. I would not like to say anything on that. With regard to savings bank interest rates, you are right. They haven't seen much increase, but as you would appreciate, the interest rates are deregulated, and any sort of introduction of any kind of administered rate for any component of bank deposits would be a very retrograde step. So we have no such ideas. It's a commercial decision which the banks have to do. At times, you would have noticed several banks also do increase their savings, savings account interest rates, because depending on their own liquidity assessment or depending on their own assessment of their own requirement and the balance sheet. So it's a decision which is left to the banks to take. So far as RBI is concerned, the interest rates, as you are aware, are deregulated.
I
can come in on that willful defaulter.
Yes, on the willful defaulter.
On the willful
part.
defaulter case, representation, if I may say so, the entire draft circular has been put in public domain for comments. We have received feedback on the circular and we are in the process of analyzing them before we refine and finalize the circular. So this feedback also will be factored in while taking a final decision on the circular.
When will final circular come, sir?
No, we are just in the process of analyzing, so shortly.
Thank you, sirs. I'll move on to the left. Mr. Mayur Shetty from the Times of India.
Thank you, Yogesh ji. Governor, I wanted to know the thinking behind the announcement on the RBI providing cloud services. Is this an extension of the principle of data sovereignty and asking payment companies to have on-soil storage of data? And I had another question on growth. What makes you so confident of growth given all the commentary that we are hearing on sluggish private investments, uncertain rural demand, and slowing import demand also?
Well, this question I was anticipating this question, but I was wondering why it has not been asked. But on the cloud part, I would request DG Ravi Shankar to reply. And why we are setting it up, we have already explained, but let DG Ravi Shankar take that part of the question. And about our confidence with regard to the growth, let DG Michael Patra reply. I will supplement if required.
Data is increasing, data storage, data processing. So efficiency is a major issue there. And currently, this data is sometimes kept in-house on premises, sometimes in other clouds. We thought the basic driver behind this is to provide a structured, scalable data storage and data processing facility, which is why the cloud has been thought about. The idea is to ensure security, integrity, and safety of data. It has got nothing to do with data sovereignty that we have referred to here. What services will be provided and all will be determined in the course of time. Whether it will be infrastructure as a service, which is a storage, or whether it will be platforms that will be provided, whether it will be softwares that will be provided. Especially for smaller entities, cooperative banks and those things. This provides a lot of efficiency in terms of scale, because for each one to maintain their database and all that would involve a large amount of investment, skill and all that, which this cloud is expected to provide. This cloud will be owned by financial sector entities, as we have clarified, going forward. At this point of time, our idea is to just give it a push, let it start off, and then let the system manage.
Like a digital public infrastructure.
It's like a digital public infrastructure.
Should we have the NPCI or?
No, we have said that at this point of time, if TAS will, create it and run it, going forward, it will shape.
Yeah, on the growth part, you can.
Yeah. So as you know, the first half's estimates have beaten all estimates, including ours. And if you just sort of put that actual number and the projections we made in the last policy together, you'll come with number close to 7 or at 7. 6.8, so 6.9. Thank you. But if you look at October-November data, the high frequency data which we use for our nowcasts, they are all very robust right now. So if you just take October-November data, you'll exceed 7. So at the current time, 7 is like a conservative estimate.
Thank you, sirs. I'll move on to Ms. Swati Bhatt Shetty from Thomson Reuters.
But let me just talk about you talked about the rural demand you talked about now, and also you referred to capex, or perhaps I would like to touch upon it. Now, rural demand, despite late kharif harvest in certain parts of the country, kharif the rabi sowing, 2/3 of it is already complete. Secondly, we have also seen that the two-wheeler sales, they have posted a significant turnaround, And in fact, according to the data provided by the Federation of Automobile Dealers Association, FADA, for the 42 days festival period during October and November, the retail sales of two-wheeler recorded a growth of 20.7%. FMCG volumes in rural segment have also shown improvement. In fact, they are growing at about 6.4%. Right from the beginning of this financial year, right from April onwards, the rural demand for FMCG is steadily picking up. And as per the latest data, they have grown by about 6.4% in the second quarter, in the whole of second quarter. This is FMCG volumes in the rural sector. Then also very interestingly, the demand for MG Narega, Mahatma Gandhi Narega, that demand also has declined for the first time in this financial year during the month of November by about 4.6%. So that is why we are saying that there are signs that rural demand is also turning around. Now, with regard to investment pickup, government capex continues to be very strong. In fact, the general government capex, that is capital expenditure undertaken by both central government as well as the state governments, they recorded a growth, capital expenditure of general government recorded a growth of 36.7% during the period April to October. In the first 7 months, from April to October, 36.7% growth in capital expenditure. Secondly, private capex is also showing signs of revival, particularly in sectors like petroleum, steel, cement and chemicals. Capacity utilization has now reached a kind of a threshold. In fact, it is higher than the long period average at 74. So it has reached a point where we can expect private investment also to start picking up. And already quite a bit of investment is taking place by private sector manufacturing companies. For example, as reflected in the fact that investment in fixed assets by listed private manufacturing companies, they registered a growth of 10.5% in the first half of the current financial year. And a number of companies we have, according to our survey and the inputs that we have received, many companies in the manufacturing sector are using their own internal reserves and surpluses to invest. They are not approaching the bank, or they are not resorting to any other kind of borrowing or raising funds. They are using their own internal reserves and surplus to investment. And then the high frequency indicators of investment, such as steel consumption and cement production, and very importantly imports of capital goods, they are also showing good growth. So all this, I think, indicates that the investment cycle should continue into the future. Thank you.
Thank you. Sir, I just wanted to check. You mentioned in your statement today that FPI flows have started to pick up. They've also picked up on the debt side, and with India's on the debt side also flows have picked up. And with India's inclusion in the global bond index next year, we could expect further flows. So even if the overall flows into India are comfortable, would you require any kind of macroprudential norms? Say if there is heavy investment in, say, the benchmark paper or any individual paper, are you considering any of those factors, and how would RBI respond to those? Thank you.
I think I have mentioned about it in some other event. Now, the impact of the bond, inclusion of India in the bond index, what impact, there are various assessments available. Various analysts are making, various assessments as to how much of, how many dollars, how many billion of dollars will flow in. We have to see. I mean, I think it will start probably, as per reports, it will start probably from June onwards. on a sort of month on month, on a monthly basis. It's not as if suddenly in June there will be a huge flow. And as per the assessments made by various private analysts and others, it will start happening from June onwards, and it will happen on a month on month basis. It will happen every month. And we have the capacity to deal with that kind of inflows. And that's it. I think if you look at our past track record, we have been managing these flows in both directions, when it is when there are outflows or there are inflows, and we are quite confident of dealing with it. And it will be a kind of a steady inflow that will, if materializes from June onwards, so we should be able to deal with it.
So apart from the
You want to add anything, Ravi Shankar, or something you wanted to say?
So just one question,
Or
I'm
you
just
want to say
clarifying my
something?
question.
Yeah.
So I was talking about, if there is heavy investment in one particular bond, would that be a matter of concern? Overall flows may be comfortable, you've been managing those, but say the benchmark bond, if say a percentage of ownership in one bond becomes, very heavily foreign owned, is that going to be a cause of concern? Thank you.
I think Ravi Shankar can take that question.
I think we should cross the bridge when we come to it, saying that what will happen if there is a lot of investment. Most central banks globally, we have not had that issue here before, but most central banks globally monitor the total holding in any particular security by any individual investors. So that's something we also monitor, but as I said, that's not something that we have had. If it comes, we will deal with it at that point in time. Just to say one other point, if you look at our history, the total amount that people say will come in through the bond index inclusion is between 20 to 25 billion dollar. I think as far back as in 2013, we lost about close to 20 billion dollars in a very short period of time without having too much of a problem. We manage that. So I think the concern that this could cause volatility and all that is a bit overblown. Apart from that, we have all the instruments necessary. The reserve levels are much higher. The parameters for our exposure or vulnerability are much better, and so on. So thank you.
Thank you, sirs. I'll move on to Ms. Swati from Z Business to ask a question.
थैंक यू योगेश. गवर्नर, आपने जो कनेक्टेड लेंडिंग के बारे में बात की है, उस पर थोड़ा इलैबोरेट करेंगे, कैसे नया फ्रेमवर्क एग्जिस्टिंग कस्टमर्स को हेल्प कर सकता है, और साथ ही जो रेगुलेटरी फ्रेमवर्क की आप रिव्यूइंग की बात कर रहे हैं, विच इज़ गोइंग टू ब्रिंग इन मोर इम्प्रूव एक्सेस टू स्मॉलर एक्सपोजर्स, आप क्वान्टिफाई कर सकते हैं स्मॉल यहाँ पर क्या है?
स्मॉल एक्सपोजर्स
जो आप रेगुलेटरी फ्रेमवर्क स्ट्रेंथन कर रहे हैं, जिससे जो छोटे एक्सपोजर्स है उसके भी एक्सेस रेगुलेटर को बेटर रहे, स्मॉल को अगर हम क्वांटिफाई कर पाएं.
नहीं, बट जो कनेक्टेड लेंडिंग की जहां तक आप पूछ रहे हैं, कनेक्टेड लेंडिंग डिप्टी गवर्नर राजेश्वर राव ने उन्होंने ऑलरेडी क्लैरिफाई कर चुके हैं. यू सी, कनेक्टेड लेंडिंग हैज नथिंग टू डू विद दिस इंटरकनेक्टेड इशू. कनेक्टेड लेंडिंग का अभी भी गाइडलाइंस है. मान लीजिए कोई बैंक के डायरेक्टर है, अगर वो उसी बैंक से या दूसरे कोई बैंक से बोरो कर रहे हैं, या बेसिकली कनेक्टेड लेंडिंग का मतलब मीनिंग ये है कि अ पर्सन जो कि एक पोजीशन में है जहां पे वो बैंक का डिसीजन को इन्फ्लुएंस कर सके, उसको हम ब्रॉडली कनेक्टेड लेंडिंग कहते हैं. और देयर आर टू पार्टीज विच आर इंटर रिलेटेड. A bank is lending to a party and there is an interrelationship already between the bank or that party. So that is called connected lending. Already we have guidelines. Connected lending के बारे में already guidelines है. Bank director, for example, bank directors जो है, directors of banks, अगर वो इसी एक particular monetary level के ऊपर अगर borrow कर रहे हैं, चाहे कोई भी बैंक हो, वो बैंक में it has to be the level it has to be taken to the board or to the वो prescribe किया हुआ है. So connected lending का मतलब जो है meaning वही है. Interconnected के साथ इंटरकनेक्टेडनेस के साथ उसका कोई कनेक्शन नहीं है. थैंक यू.
जो वेब एग्रीगेटर्स के लिए भी आपने जो डिजिटल लेंडिंग पर एक तरह से फोकस करने की बात की है, तो क्या ये रिस्ट्रेन करेगा या टाइटन करेगा स्मॉलर टिकट लोन्स को? सर, विल इट अफेक्ट दैट?
यू वुड लाइक टू टेक दैट?
No, this is I would say this is actually a follow up on the recommendations of the working group which was accepted by the Reserve Bank working group on digital lending, which was accepted by the Reserve Bank last year. We had come out with guidelines. We said we will also look at regulating the web survey, lending through the web platforms. So we are planning to come out with guidelines which will specify what will be the basic idea is the lending service platform, they may collect information from various sources and give the detail to the customer. But there could be a preference to certain things, certain other things may not be covered. So we will kind of give them some guidance on what should, so that the borrower has full transparency on what are the rates available to him.
See, web aggregator जो function करेंगे वो उनको बिल्कुल it should be a neutral platform होनी चाहिए.
Exactly.
ये ना होना चाहिए कि उन्हें कोई थ्रू सम अदर मेथड वो एक पर्टिकुलर लोन प्रोडक्ट को वो मतलब पुश सेल करेंगे. सो हमारे नोटिस में कई सारे इंस्टेंसेस कुछ इंस्टेंसेस आए हैं, तो इसीलिए उसको वी आर ट्राइंग टू मेक इट ट्रांसपेरेंट, न्यूट्रल एंड कोई मतलब मिस सेल ना होना चाहिए, नहीं होना चाहिए. एट द सेम टाइम बोरोवर का डिसीजन पर इन्फ्लुएंस करने वाली भी उसमें कोई स्कोप नहीं होना चाहिए.
Thank you, sir.
So we'll take last few questions.
Last few?
Yes, sir.
Okay.
Because there have been some people who have been waiting very patiently. So I'll start with Hamsini Karthik from Hindu Business Line, followed by Hitesh Vyas, and with Mr. Pankaj Jaher from the Informers.
These three? Okay.
Hi, thank you. There seems to be a sort of growing reliance by most of the lenders, banks and NBFCs put together for risk-based pricing. This is both on the secured as well as the unsecured side. You've tried to, or rather you have attacked the unsecured side through the RWA, but yet there is a sense that we can price the risk very well. At a regulatory level, is this something that you all are very comfortable with? And there is another layer to it on the secured loans, where we're seeing that the terminal value of assets are actually reducing in terms of their market value when they put out vis-a-vis a new property. This is evident with cars, this is evident with home loans, etc. as well. But the pricing between the two is really shrinking. Whether we take mortgages versus LAP or second-hand cars versus new cars, it is shrinking. Is that a cause of concern for you?
Understood. I think DG Swaminathan, I would request him to take that question.
So essentially, risk weights have to be aligned with the type of the product and the segment to which it caters to. So the macroprudential level, the regulations try to segregate them on that principle, and then accordingly we ensure that the risk weights are assigned. So the lenders will accordingly calibrate their business models. So wherever we see a possible risk build-up, as a preemptive action that we have taken certain measure, and to remind you that these additional risk weights on some of the items are only bringing back what was actually prevalent pre-COVID. These segments were sort of a bit of relaxations were brought in to facilitate a very unusual situation. So they are now back to the normal numbers. Apart from NBFC, which was a recent phenomena which we had to act upon. So it is towards that effect that wherever there is an additional risk buildup, that has got to be addressed. The second part of your question, I'm sorry, I didn't get it. What was the second question that you asked?
Earlier we used to have at least 200 to 300 bips gap between a LAP and a mortgages.
I'm sorry. Yeah.
That is shrinking. It's now around 70 bips.
Okay. See, this is essentially, we have guidelines which are clear in terms of how pricing will have to be done, whether it is an MCLR based lending or an external benchmark linked rates, how and the risk premium and the operating cost can be calculated and arrived at. So this is what is the guidance that we can provide for. Beyond which, what exactly should be the applicable or effective pricing for a particular product or a segment of customer is purely driven by the policies approved by the boards of the respective lending institution, and also their business model and focus areas, and in line with their risk appetite framework. So it is not to be construed that the regulation will look at the differential pricing between various products, how secured or unsecured it is. We look at the risk build-up and try addressing it. Pricing is part of the commercial decision. And how exactly to build the risk premiums over different products is something which the banks themselves build, basis their risk appetite framework and the business priorities.
and you believe it is in a comfortable position today?
This is absolutely. This is something which is left to the commercial judgment and wisdom of the lending institutions. And if you see any unusual outlier behavior, that will be curtailed through the supervisory process. We may not require regulations to control that.
Thank you.
Sir, Mr. Vyas.
Hi, sir. Good afternoon. Sir, I just want to understand on the policy stance. You have explained in the past, but I just want to understand once again. When you say withdrawal of accommodation, what exactly does it mean?
I think you can take that. We have explained it. Take that.
Actually, Governor has explained this several times, but let me take a last attempt. So, in modern times, monetary policy is chiefly operated through the interest rate. And monetary policy is a tool of stabilization. By stabilization, I mean that when GDP goes way above its trend, the task of monetary policy is to bring it down to its trend. And when inflation goes above its target, monetary policy tries to bring down inflation to the target. So obviously when this kind of thing happens, that GDP goes above target or inflation goes above target, monetary policy raises the interest rate. Okay. And conversely, when it's below, it reduces rate. So increase and reduction of rates is probably with some kind of a benchmark. So there is a certain benchmark where if inflation is at target and GDP is at trend, monetary policy has to neither restrict or accommodate. Okay. At the current time, GDP is at potential, at trend with the new number. But inflation is way above target. In fact, if you take the average for the year, it's 5.4%. And the target is 4. So we have to withdraw accommodation further to bring back inflation from 5.5 ranges to 4. That is withdrawal of accommodation.
Okay, sir. Thank you.
So this side we have missed out one of Mr. Pankaj Ahe.
Yeah.
So before I ask a question, I wanted to actually compliment you for the candor with which you have answered at least a couple of questions today.
Couple only. So, why do you say unusual that we reply with candor? I thought we have tried to be as transparent as possible.
Central banks are known to be very transparent, we know that. So, I'm referring to your answers particularly to the questions on over-tightening, where you were kind enough to very clearly say that, this should not be read as any kind of loosening is around the corner. That is unusual candor coming from you, and we are all thankful for that. And also on the question, also on the question of stance, you clearly said that there is no inadvertent communication from the RBI. We also appreciate that. I think market will be very happy to hear those things. My actual question is, given this backdrop, given the Monetary Policy Committee's target of inflation control, given the RBI's projections for inflation, would it be fair to expect that unless there is an external shock or unforeseen shock, monetary policy will continue to remain actively disinflationary till inflation reaches 4%?
No, I think same kind of question came earlier also, and I have replied. We are not giving any forward guidance about we are not giving any forward guidance about our specific actions with regard to stance or with regard to the rates. With regard to stance, the Deputy Governor has explained what is meant by withdrawal of accommodation, so you can interpret from that when the RBI will probably, if that situation materializes, that can be a situation where RBI can think of changing the stance. But at the same time, reaching 4%, I would just like to supplement, reaching 4% should not just be a one-off event.
Exactly.
It has to be durably 4%. And the MPC should have confidence that yes, 4% has now become durable. So therefore, you can interpret from that when the stance will change. And with regard to the rates, I will not be able to give any forward guidance. That will depend on the evolving situation. And since this is the last question, I guess, I just wanted to say it just for clarification, because media has its own way of interpreting statements, and I don't want to be inadvertent in any manner. So let me say I referred to this Arjuna's quiver. Let me say very emphatically that we have no exalted notion of ourselves as an institution. It was just a kind of a analogy or a metaphor I used to explain, to just say that that particular instrument is available with the Reserve Bank. There is absolutely no intention to have a exalted opinion of ourselves or to assume that we have become equal to a great warrior. We draw lessons from the principles that the character Arjuna in Mahabharata has demonstrated from time to time. Thank you.
Thank you, sir. With this, we come to the formal close of the press conference. I would thank all
I use
media.
the word character of Mahabharata. Arjuna, it's not character, it's a great warrior of Mahabharata.
Thank you, sir. I would like to thank all the media friends for patiently participating in the press conference, and also thank the top management led by Governor Shri Shaktikanta for making it very interesting. Thank you very much, and wish you a happy new year in advance. Thank you.
Yeah, wish you all a very happy new year. And once again, your reference to inadvertent made me to again clarify these two things. Thank you.
Please do upload the initial points you made.
Yeah.